Hello friends, I'm Pooja Gandhi from Kirin Advisors. Welcome you all for the virtual IPO roadshow of Signoria Creations Limited. Signoria Creations Limited is one of the leading manufacturer and marketer of women's apparel. Operating under the brand name Signoria, the company offers a diverse range of women's clothing and aims to expand on a pan-India basis. Now I would like to invite Ms. Kritika Agarwal, promoter and president. Welcome ma'am.
Hello, ma'am.
Mr. Ashok Holani, Director, Holani Consultancy Private Limited.
Thank you.
Welcome, sir. Now I'll be showing a short AV about the company.
Limited. We all live in the VUCA world, where impressions are made within a few seconds. So, impeccable dressings and style to define one's personality in any setting is imperative. It was this intent that propelled the inception of Signoria Creations in 2019 by the dynamic and visionary business leader Mr. Vasudev Agarwal. Signoria Creations is in the business of manufacturing attire for the third millennium modern woman within the Indian cultural context and global perspective. Therefore, the company manufactures Indian and Western wear for women using traditional motifs and printing techniques used for centuries in Rajasthan and Western India like ajrak, sanganeri, hand block, bandage, tie and dye, ombre and dabu. And the fabric too is indigenous, locally made cotton 60/60 Tat certified. Their collection offers Indian wear. The offerings includes kurti sets with and without dupatta, and in Western wear, there are gowns, coat sets and tops, both formal and casual. The Signoria Creations has left its footprint all across the Indian subcontinent. Signoria products can be shopped in metros of Mumbai, New Delhi, Kolkata and Chennai, and have also penetrated the Indian hinterland markets like UP, MP, Telangana, Bihar to name a few. Signoria owes its wide market geography to the efficient and wide network of wholesalers and distributors along with e-commerce platforms for the B2B sales. They in turn supply to an extensive web of retail stores and chains which takes the products to the end customers all over India. The brand has built a name and reputation for itself over the years through consistent quality, creative designs and unique fabric selection. Quality control in ethnic wear manufacturing is crucial to ensure the final products meet the desired standards of craftsmanship, durability and aesthetic appeal. Hence, there are stringent quality control measures in place to ensure consistent output of quality creations from the house of Signoria. These stringent quality control measures are followed in both the manufacturing plants of Signoria Creations, located near the Ricco industrial area in Jaipur, Rajasthan. In both these units, approximately 50% of production is automated. It has to be said here that achieving 50% automation in ethnic wear production is a significant milestone, indicating a high level of efficiency and productivity in the operations. With such a substantial degree of automation, Signoria Creations benefits from streamlined processes, reduced labor cost, improved precision and increased output capacity. Thanks to the high levels of automation, the workforce is compact with the majority of the workforce coming from contractual laborers. The third factory of 25,000 square feet covering 8 floors will host the entire production channel from stitching to embroidery, to designing to finishing teams. Chairman and Managing Director Mr. Vasudev Agarwal. He has decades of experience in handling finance and marketing and has been steering this company towards steady growth. It is his insightful leadership and financial acumen that has helped the company reach the heights of success that it has till now.
सिग्नोरिया क्रिएशन की स्टार्टिंग छोटी लेकिन मजबूत फाउंडेशन के आधार पर हुई। मजबूत फाउंडेशन के आधार पर हमने अभी तक इंडिया का मार्केट कवर किया और अब हम जल्दी ही वर्ल्ड वाइड मार्केट को कैप्चर करने की तैयारी कर रहे हैं। हमारे पास में बहुत ही स्ट्रॉन्ग टीम टेक्निकल कैपेसिटी है जिससे हम इस कार्य को जल्दी ही पूरा करेंगे।
Promoter and whole-time director Ms. Babita Agarwal. She plays a key role in procuring raw materials for the organization at competitive prices. She excels in bridging the gap between customers and the organization ensuring the delivery of top-tier products and services at competitive market prices.
किसी भी कंपनी के ब्रांड की जो फेमिसिटी होती है वो उसके प्रोडक्ट क्वालिटी पर निर्भर करती है और सिग्नोरिया क्रिएशन का हमेशा से ही मोटो रहा है कि हम प्रोडक्ट क्वालिटी मेंटेन करें जिससे कि हमारे डीलर्स हमारे कस्टमरों को ज़्यादा मुनाफा हो सके, वो ज़्यादा से ज़्यादा हमारे सिग्नोरिया ब्रांड को बेचें।
Non-Executive Director Mohit Agarwal. He has in-depth knowledge of manufacturing, especially the nuances of the technical aspects. He actively participates in various textile and garments fairs, exhibitions and IPF events that underlines his commitment to stay informed about industry trends and advancements.
Fashion industry is very fickle, and as a business owner, I take it upon myself to keep a track of emerging fashion trends in India and abroad. We as an organization strive to start trends based on customer feedback and requirements of the modern women in all strata of the society.
President and promoter Mrs. Kritika Chachan. Her creative skill is the driving force behind Signoria's distinguished collections. Each masterpiece reflecting her meticulous attention to detail and unwavering commitment to excellence. Her innate understanding of textile craftsmanship and design aesthetics has propelled the company to the forefront of the industry for its exquisite creations and timeless appeal.
I am passionate about preserving India's rich and ancient cultural heritage. I am actively involved in the product development process and ensures that each garment is infused with authenticity, integrity, and a touch of contemporary flair. I want to ensure that every garment made in Signoria Creation embodies the essence of traditional elegance while meeting the demands of modern-day fashion enthusiasts.
Going forward, Signoria Creations looks to expand its market and penetrate Tier 1 and Tier 2 cities within India and also percolate to the rural areas. Market research is underway to identify new international markets with high potential for Indian ethnic wear sales and establish distribution channels accordingly to expand our international market and our footprint globally. Simultaneously, the company is planning to improve its e-commerce platforms and digital marketing strategies to increase online visibility and attract more customers. Brand building initiatives are also afoot to enhance image and visibility through influencers, celebrities and fashion bloggers who align with the company's brand values to increase brand awareness and reach a wider audience. Fashion is an evergreen industry and Signoria Creations is relatively a new entrant that is all set to grow into a massive brand canopy, which will provide affordable style to millions of women across India and the globe.
Now I request Ms. Kritika to give a short brief about the company. Over to you, ma'am.
Hello everyone. It's my pleasure to stand before you today to introduce myself. My name is Kritika Chachan. I'm promoter and president of Signoria Creations. And I'm honored to have the opportunity to address the gathering. Throughout my life, I have been driven by a passion of garment designing, which has guided me on a journey of growth, learning, and discovery. Today marks a significant milestone in the journey of Signoria Creation Limited as we embark on a new chapter by launching our IPO, bringing the essence of women's ethnic wear to the forefront of global market. Brand philosophy is deeply rooted in celebrating the beauty of diversity and embracing the richness of cultural heritage. Quality assurance is the bedrock of our company, and sustainable manufacturing practices lie at the heart of our operations. Our fabric stories are testament to the rich heritage and craftsmanship of traditional textiles. Technology and innovations are integral to our brand integrity, and ethical labor practices are non-negotiable for us. So that's all what about our Signoria creation was. So, and with this, I conclude that the launch of our IPO represents a significant milestone in our journey towards achieving our vision of becoming a global leader in women's ethnic wear. And we are grateful for the support of our investors, partners, and our customers. And we are really excited about the opportunities that lie ahead. Together, let's embark on this journey with confidence, passion, and a commitment to excellence. Thank you so much.
Thank you, ma'am. Now, I request Holaniji to give detailed presentation of the company. Over to you, sir.
Thank you. Thank you, Pooja. Hello, friends. Signoria Creation Limited is the another SME IPO which the Olani consultant is lead managing. The IPO is scheduled to open on 12th of March 2024 and it will close for bidding on 14th of March 2024. In this IPO, there is a portion of anchor bidding also. So anchor bidding will open on 11th March 2024. The total issue size of this company is 9.25 crores, bifurcated into the 14 lakh 28,000 equity shares at a face value of rupees 10 each. The price band of this company has been fixed between 61 to 65 rupees, and under that 14 lakh 28,000 equity shares which the company is planning to dilute via this IPO offering has been allocated under the book building method, wherein 50% of the 50% of the IPO size has been reserved for the QIB bidding, 35% has been reserved for the retail bidding, and 15% has been reserved for the HNI bidding. The allocation shall be as under 3,20,000 equity shares shall be kept under the anchor bidding, which will open on 11th March. 2,16,000 equity shares are left for the QIB bidding. 2,50,000 equity shares are left for an HNI bidding, and 5,30,000 equity shares have been left for retail bidding. In addition to these allocations, there has been reservation for the employees in this IPO to the tune of 40,000 equity shares. Along with that, there is an allocation for the market maker as per SEBI guidelines amounting to 72,000 equity shares. So overall, this is the total issue size. Upper band, the issue will be 9.28 crores, and on lower band, it is 8.71 crores. Now I will take you down to the company brief and the financials. The Signoria Creation Limited is basically a manufacturer and marketer of the women apparel products. This company is dealing into the manufacturing of kurtis, pants, tops, skirt sets, dupattas, gowns, mainly and 100% women ethnic wear products. The company is based at Jaipur. Its manufacturing facilities are also based at Jaipur. There are two manufacturing facilities the company having in which they pursue the entire manufacturing process, starting from the gray, dyeing, stitching, cutting, knitting. Everything is done in these two manufacturing units. The total team size for this company is around 140 peoples who are comprising of designers, accountants, cutters, fabricators, designers, embroidery, everybody is there. So they have entire process, which I will take in a detail in a few slides from now. Will explain you in detail. But the company is cover every aspect of this manufacturing process, and really any process is left alone in this company. The company has 950 designs under its portfolio and which are increasing on year-to-year basis. The company is certified by ISO for their quality production. The total capacity of the company as of now, before going on to the public, is 4,77,000 quality garments, comprising of the kurtis, dupattas, and etc. On the financial front, the brief summary is very attractive. Company in last financial year has done a turnover of 19 crores, and on that has earned an EBITDA of 3.83 lakhs. The PAT is 2.31 lakhs. The ROE and ROCE are also very impressive for this company. 62% is ROE and 25% is ROCE. The company was set up in 2017, and since then the promoters and their entire family is into this business. and looking after the day-to-day affairs of the company. So the company has a very experienced management on their disposal. The company is known for its quality products. They are selling their product under a brand name of Signoria, and they are very renowned brand both in the domestic market and also in the overseas market. The main business model of the company is the wholesale selling, where the company manufacture goods for the manufacturers who in turn sell to the B2C clients. So company is mainly focusing on the wholesaling of the products. Recently, the company has also started selling the products online also, and they've developed their own YouTube channel in which they are marketing their products. Of late, the company has also started e-commerce websites. Also, they have been partnered with the Myntra, Ajio, and all these kind of websites for selling of their product. So the company was incorporated as a wholesaler, supplier, manufacturer, which they are doing regularly. Last year, they have started a YouTube channel also for selling their own products. Along with that, also partner with the e-commerce companies for selling their products. So overall, they are targeting to cover every type of customers who comes over for acquiring these products. The third important thing about the company is the relationship with their clients and their customers. So since I already told you that the company is mainly focusing on the wholesale selling, so company has a key sets of buyers from various markets like Delhi market, Rajasthan market, or a UP or Punjab. Everywhere they have the fixed sets of wholesalers whom the companies selling their products. In addition to these fixed sellers, the company is all targeting for selling their products. The company on year-to-year basis has been increasing its strength. Now the products of the Signoria company are sold in 14 states across the India. In addition to that, company have a very good manufacturing facility. The company has two facilities, both in Jaipur, Sitapura industrial area, Mansur industrial area, in which they are selling their products. The company has been ably managed by the board of directors of the company. The head of board of director, Mr. Vasudev Agarwal, is the chairman and managing director of this company. He is ably supported by Babita Agarwal, who is the whole-time director, Mohit Agarwal of non-executive director. So as I told you, the company is looked up by the family who are fully involved in promoting this company. In addition to that, company has a two independent directors, both are qualified company secretaries to guide the company or the corporate principles. The company has as I told you, has a 950 plus designs in their portfolio, which comprises of mostly of the products like kurti, tops, gowns, covert sites, kurti pants and pattas. So every type of wearing of the clothes are dealt by the company. Here are some of the glimpses of the products manufactured by the company. This is the detailed manufacturing process which the company undertake while selling their products. The company has own designing team in their disposal which design the product according to the market demands. Thereafter, on the basis of the demand, they select the fabric which need to be acquired for making this particular piece of. Then they procure the fabric for 11 suppliers. Thereafter, then they do process the layering, then cutting, sewing, finishing, inspection, ironing, labeling, and distribution. So the entire value chain involved in the manufacturing of a product are dealt by the company. They have the glimpses of sub or the manufacturing facilities of the company, in which there are two facilities. One is on rented basis, one is a owned basis, owned by the company itself. This is the many installed capacity of the company as of now, which is increasing on year-to-year basis. As of now, the company has a capacity to manufacture 1 lakh kurtis, 1 lakh kurti pant, 1.47 lakhs kurtis pant dupattas, 10,000 gowns, 1 lakh tops, and 20,000 others. But since these products mainly are the ladies, the company has an interchangeability facility. According to the demand, they can increase or decrease any one particular capacity to produce another product. This industry has gone leaps and bounds in recent years. We did one IPO in 2017 of JaipurKurti.com, Nandini Creation also. It is also appear in the same business market. North India, there is a major consumer for the products of the company since this type of wearing has been generally followed by the North India. South Indian also, the companies slowly making the inroads and selling their products, but majorly the demand for the company products is emerging from the North India, and that too in the summer season. The business has been going on year-to-year basis. The company has been doing fairly good on the financial side. The company since the last 3 years has doubled or triple its turnover. It was 5.88 crores in FY21. It is increased by 100% to 11 crore in FY22. It again rise to more than around 100% to 19 crores in FY23. And similarly, in September of this particular half year, the company has attained a turnover 6.5 crores. According to the company recent trends for last 3 years, it has been observed that company major sales happens in the second half of the year, because since it is a manufacturer and sell to the ultimate retailers who sell these products in the open market, so these retailers order to the company in the off season so that they have the enough stock in hand to sell this product in the season time. So the major demand for the company products come in the second half of the year, where when the winters are running. So the company manufacture the products so that at the time of summers, when the season for sale of the kurti comes, the every retailer, every wholesaler should have the adequate supply and stock of the raw kurtis so that they can encash on the demand of the product. So the company has a trend of making these sales in the second half of the year, and the company is hopeful to suppress the figure of FY23 in the current financial year. Similarly, the EBITDA and the PAT of the company has been growing. It increased from 32 lakhs in FY21 to 2.31 crores in FY23, mainly due to the rise in the turnover of the company and cost efficiencies. The EBITDA is also increasing on year-to-year basis. It rise from 75 lakh in FY21. It has rose to 3.83 crores in FY23. Next, please. This is the detailed analysis of the company financial profitability for last 3 financial year plus the stub period. You can see that turnover has been increased on year-to-year basis. Similarly, the EBITDA and the PAT. The PAT margin of the company has also been increasing on year-to-year basis. Last year, with the economies of the sale and the more famous of the Signoria brand, the company has been able to achieve better margins. The PAT profit of the company has increased to 12%. The company has a healthy balance sheet since it's a growing company. It has been little bit leveraged also, but within the acceptable norms. The debt equity ratio is just below 2. The company has equity of net worth of 6.47 crores in the current FI in the September 2023. The company has a borrowing in the form of short-term borrowing from the banks for CC limits. The non-current borrowings are in the form of term loans taken for acquiring the factory and the plant and machinery capex. And the current creditors are there, which are offsetted by the debtors and the inventories. So company has a very asset-light model. Recently, the company has made us a one capex of factory in their premises so that they can have a reduce the cost of rental in their portfolio. So with the commencement of this factory, the rent cost will also come down and the company will make more profits. The cash flow, it is, since a growth company and looking after to raise money to meet in the working capital, cash flow operations, although negative, but since the company is at growing stage and growing the turnover 100%, it is acceptable. Debt equity ratio, as I told you, it is coming in within the acceptable lines. It is below the two in the last financial year. The ACR is also at acceptable 1.95 in the last financial year. Current ratio is within the acceptable 1.5. Inventory ratio is very minimum because the company products are sold on a very fast pace. EPS of the company is growing thanks to the profits company is earning on year-to-year basis. NAV of the company is 58 rupees, and we have priced our stock very reasonably. Our price band is 61 to 65, and it is very near to the net asset value of the per share. So company is demanding a good valuation according to the P multiple which the company which we have given, and plus the NAV value which is very near to the issue price. Issue, as I already told you, is comprising of 9.28 crores, and the company will be listing on the NSE Image platform. Thank you.
Thank you, Hulanji, for giving an excellent presentation. Now we'll start with question and answer session. I request all the participants to please post your questions in comment.
Hello.
First question is from Ms. Ananya Swaminathan. We see funding requirements for working capital, but have not seen good revenue growth in FY24 first half. Please explain.
Yeah, this question is already explained in my presentation, but again I give more emphasis on this particular question. So the Signoria Creation is the manufacturer of the ladies' garments like dupattas, kurtis, coats, and salwar dupatta, etc. So these are the products which are mainly sold in the North India side, and there these products are wear by the ladies in the summer season or in the seasons spring season. So when the demand for the product is there, that the person who sell these products need to take inventory of these goods on a reasonable basis before the start of the seasons. So they make order to Signoria Creation at the off season, which is October to March, when the summer winters are going on in the Rajasthan region where the company has been situated. So when the orders come in the off season, they make the product and supply to the retailers, wholesaler who sell these products to the ultimate consumer. So they need to have an inventory of their stock before the start of the season. So historically, the Signori Creations demand for working capital increases manifold times in the second half of the year, and to meet the gap between the demand for the working capital, the company is coming up with this IPO to fund its deficit in the working capital. And this is the major object of the company, to fund the incremental working capital requirement which originate majorly in the second half of the year.
Okay. On to next question from Deepika Chedda. Nice video.
Thank
Move
you.
on. Move on to next question from Siddharth Iyer. Are we in contract manufacturing for any leading brands? If yes, what is its contribution to overall sales? Uh, Ma'am, you're on mute. Please unmute yourself.
Sure. Yeah, hi, ma'am. Ji. We have on board 11 to 12 brands with us, like we have Levi's, Mirchi, Anok, Verumoda, and if you have heard about brand like Vishud, Kiasa. So in all entire sales, they contribute approx 30%.
Okay. Move on to next question from Kiran Gavra. Almost 70% of the revenue is from the top 10 customers. What if the biggest customers decide to stop buying from you? What's the plan to keep the business going?
Uh, since even though those are the 10 customers, but they are the repetitive customers with us, and they are with us just because of our quality and what the range we are making, which is not easily available in that price range in the entire market. So that's the reason those big customers are still ongoing with us. And still, for the second substitute, we have started our channels also, and we have on board with our number of brands also, and we are on it. Like, we have on listed 11 brands, and we have our types coming up with 3 to 4 brands more. So in future we are going to grow, even though those 10 customers they are not with us, even if,
Okay.
yeah.
Move on to next question from Gaurav Mehta. What was revenues and profitability in the first 9 months of FY24?
Since we are allowed, we have represented only 6 month data in our RHP, so we can only comment on the first 6 months only rather than on a 9 month basis. So first 6 months, our turnover was 6.52 crores and our profitability was 65 lakh rupees.
Okay. Move on to next question from Weber Creation. What is your current capacity utilization? What are future capex plans?
As of now, our current capacity utilization for the year on a yearly basis, in some product the company is working on 100% capacity, but other products the company has a varied capacity like 80%, 70%, 60%, depending on the type to type product. If we go on a detailed bifurcation of the capacity, I can just explain you. For the product kurti, pants, and dupatta, the company has a capacity of 1.47 lakhs of these items. And as of now, in last financial, the company was operating at 60% capacity. For the product kurti and pants, company has a capacity of 1 lakh units designs. The company is operating at 94% capacity last financial year. For the kurti, it's only the company has a capacity to manufacture 1 lakh kurtis. The company is operating at 60% of its capacity. Then gown, the company has a capacity to make 10,000 gowns a year. The company is operating at 60% capacity. And others, the company has a capacity of 20,000 pieces and the company is operating at 96%.
Okay. Move on to next question.
And about the future capex plan, the company on last 3 years is in making the investment in the plant and machinery to enhance its capacities. The capacity has been increased twice in last 3 years. Recently, the company has shifted to another manufacturing unit, which is owned by the company itself. It is in a bigger size. So, company has a plans to go to make more capex in the coming financial year to increase its capacity and make more sales.
Okay. Move on to next question from Bharti Agarwal. Do you make ethnic wear too? What are your plans to enter into men's and kids wear?
Yes, we are making women's ethnic wear only, whether it's a top kurti. They are the casual wearing and ethnic too. And honestly, we are not planning to enter in any men's or kids segment, because honestly, Signoria is like a little baby right now, and it has to grow a lot with all of your support. And because the women's garment itself has a very huge market, and we have captured a very small scale right now. So in future, we are planning to expand that only. And if we'll be able to cover the entire market of women's, then might be we'll be switching to men's and kids, but not as of now.
Okay. Move on to next question from Ananya Swaminathan. What is your business model? Do you have retail sales or do you do it for any big brands? And in that case, what is the margin we earn when sales is to big brands?
Yes, we are making garments for big brands, and we don't have any retail as of now. And big brands like, you might be knowing few brands, like we are making garment for Kiasa, and we are making garment for Mirchi. We buys, they all are listed on Mintra also, and they have offline stores too. And in that case, what is the margin? A margin is like we are earning a 15 to 20% with those big brands. Agreed. With big brands, we have less margin as compared to the smaller wholesalers. But big brands we prefer for the volumes. They give us a good volume through which our capacity runs entirely.
Okay. Move on to next question from Janam Savla. For a sum of 10 crores, where the company choose to go for an IPO, borrowing or private funding would have also been a good option.
Yeah, it can be said that there are multiple options available in the market. The company can go to the private equity also, can go for IPO or for bank borrowing also. The company has, as of now, has chosen this route of raising the money, which is seems more suitable to them. So that's why they are going for the IPO.
Okay. Move on to next question from Deepika Chadda. Do you have any long-term agreements with your suppliers? If not, then how will you make sure there's proper availability of products as and when required?
Ma'am, from the last study of 3 years, we don't availability. We have learned a lot regarding what articles should be made and when. So we have a good team for that. We have a good availability of products, and we have a tie-up with our vendors also. And for the suppliers, we don't need any long-term agreements because it's a garment and a fashion industry. So it keeps changing every day. So we are on our developments, on our designs, and we are maintaining our quality. So there's no need of long-term agreements with any of our suppliers too.
Okay. Move on to next question from Paresh Javeri. Company has unsecured loans which are repayable on demand. Are you able to repay this without affecting your cash flows?
Yeah, the company has the ability to pay the unsecured loans which are taken mainly from the promoters and their families. The company they have invested for the strategic for growth of the company. When the company has a adequate working capital, then these loans will be taken back.
Okay. Move on to next question from Tara Kaur. Is our business working capital incentive? Why were our short-term debt high in H1 FY24?
Yeah, the this industry is working capital incentive itself because the company first of all makes the designs which are acceptable in the market, look into the current trends. Then the entire value chain works for that. They have to order the fabric, they cut, they dye, and make the process. So generally, it takes around a month or so to develop a particular product. Then company sell it. Then on a credit terms, it sold. So 2 3 months are there for the giving the credit to the customer. So the ultimate realization is comes up in a 3 4 months, like working capital cycle. So to fund that particular short fund requirement, the company requires working capital. That's why every manufacturing company engaged in this particular trade has required a working capital on a mainly basis. So it can be said it is a very incentive rather than and the second question, the short term debt. Basically, the company has borrowed working capital limits from the bank, and when the, as I said, in the first half of the year, the company business is on the low side. In the second half year, it is on high side since the realizations are not there and the sale is on a minimal side. So the requirement of debt is more. In the second half of the year, the requirement of debt is very minimal. So it's on an overall basis, the company on a yearly basis doing fairly good in terms of debt management.
Okay. Move on to next question from Connection Network. Hi, Surendra Sharma from Connection Network. My question is, who is your biggest customer and contribution from the top five customers?
The company is selling to the mainly the wholesalers. They have n number of wholesalers who acquire the company products. The contribution of the customer of top 5 customer is around 60% and top 10 customer is around 70% in the total revenue of the company.
Okay. Next question from Priyanka Solanki. You mentioned you want to expand your presence pan India. Where we can expect expansion coming up?
Kritika will answer this.
Ma'am, Pan India, we have already covered approx 14 to 16 states, and it's not on a particular state which we are going to capture, for which we are planning the expansion. It's for the entire, actually, for the wholesalers who are present all over India, Pan India. Like in South, we are dealing with six main brands, and in North, we have approx 11 brands and super wholesalers too. So there is no specific place where we are expecting the expansion. It's entirely on entire pan India actually.
Move on to next question from Sneha. Your products can be copied by other companies. How do you handle this?
Ma'am, it's a fashion industry actually, and as soon as the garment gets out with any of a single super wholesaler or wholesaler, there's a probability of 80% that it gets copied. So that's why we are developing garments on a daily basis. Our design team is working, or they are making approx 4 to 6 garments on a daily basis. So we have a rotation of garments, whether the even though garments are getting copied, it's not affecting to our sales at all, because whatever quantity we are making, like 600 to 800 pieces in every garment, so we are selling it within a week. By the time if it get copied, we are over with that style, so it's not affecting our sales at all.
Okay. Next question is from Siddhartha here. Do you enjoy any government subsidies offered for the textile sector?
No, as of now, we don't enjoy any subsidy.
Next question from Ananya Swaminathan. Do we have export presence? If yes, what is its component in overall revenue for FY23 and in the current year?
No, we don't have any export presence. As of now, we our entire sale is on a domestic basis. Some of our customers who are acquiring our products from us are selling to the overseas market. But on the company side, there is no export sale as of now.
Okay. Moving to next question from Ms. Vidya. As you operate in a highly competitive and fragmented industry, what are your plans to sustain in this business?
Ma'am, in this industry, there are people who are making and who are playing with the fabrics in n number of fabrics. We are the only manufacturers who are dedicatedly making garments on cotton, and that too that starts at 60/60, which we call that too TAT certified. This is the most premium and most certified fabric in cotton, and that is the only reason that Signoria stands among all the this fragmented industry. And what we assure with our customers, that you will find there is no color bleeding, no fabric shrinkage in any of the garment. So our quality and our print, since we mainly work with Jaipuri prints, whether it's a hand block, Dabu, Ajab prints. So our print quality and our garment finishing and quality is what make us separate, sustainable in this entire business.
Okay. Next question is from Mr. Janam. Are your manufacturing sites on rental basis or owned by you? If owned, what was the cash outlay for the same? If on rental, what is monthly rental paid by the company?
As I told you, we have the two manufacturing facilities. Last year, both the facilities were on a rental basis. The company in the last December only has vacated one rental facility and shifted to the facility owned by the company. So as of now, the company has one rental facility at its disposal and one facility which is owned by the company. But the rental of this company, one facility which is on a rental basis is 94,500 per month.
Okay. Next question from Ms. Tara Kaur. Can you let us know how the money that was raised will be used?
Yeah, the money raised from this IPO shall be entirely used for meeting the working capital requirement of the company. Out of 9.28 crore which the company will raise from this particular IPO, around 6.28 crores will go for meeting the working capital requirements, and the balance will be met used for meeting the general corporate purposes and meeting the issue expenses.
Okay. Move on to the next question from Pramod Kamble. Textile is a commodity business. PE of 13x and 14x seems very expensive, especially for a business which has high debt, high working capital, poor profit outlook. What is your view on it?
Textile has a very large industry. You can say it is comprised of the spinning, weaving, knitting, and manufacturing also. So the segment in which the Signoria creation is operating as of now is into the manufacturing of the fashionable wears by the ladies, like kurtis, dupattas, etc., etc. So these are the very fashion commodities, and due to the latest trend in the market, when the ladies prefer to wear these products on a larger basis, the demand for this product has increased immensely over a period of time. So this particular industry can't be come in, categorized as a textile, which is mainly of the spinning or weaving, etc. In regard to the another red flag regarding the high debt, high working capital, or poor profit outlook, which is I don't think it is applicable in this Signoria case. The company has a very reasonable debt of just for the meeting the working capital requirement, which will be held which is required when a company is making 100% growth on year-to-year basis. In regard to the increase in the long-term borrowing, which was recently done to acquire a facility which is owned by the company. Earlier, then there was no term loan by the company. This term loan has been taken just to reduce the rental cost. So, can't be termed as a high debt. High working capital is required since it's a growth company. It is increasing profit on a sales on a year-to-year basis. In regard to the poor profit outlook, last 3 years the company has been very good in earning its profitability. Last year the company has clocked a net profit margin of 12%, which is very acceptable in the market. The current year, as I already said, the half year numbers are not the indicative of the company performance. You have to look into the full year numbers, and looking out of the past trend, the company seems to be fairly valued at the present price to earning ratio, which we have proposed for this company.
Okay. Want the next question? Um, Tara for nice video and presentation. Move on to next question. Devika Chetta, all the best, Holani sir and Signoria team for the IPO. I hope we have covered majority of questions. We can conclude. Thank you, Kritika ji, Holani ji, for giving insights about the company and IPO to the investors community. And thank you, investors, for the IPO roadshow. All the best wishes to the management of IPO. Thank you once again.
Thank you so much.
Thank you.